Should the next bull market be built on dividends from YieldBOOST and GraniteShares? We're obviously getting more accustomed to dividends from ETF issuers like Yieldmax and Roundhill, but many of those ETFs by Yieldmax are either tech-based or are not fully indexed. Roundhill doesn't have exactly the highest yields either. YieldBOOST and Roundhill help us earn over $600,000 per year in dividends, as you can see right here, and we're up $30,000 on Friday, or 2.03%, which beat the indexes above. When you factor in our margin, we have about 500 grand worth of margin, and we're beating all the major indexes with our approach using Yieldmax and margin. We're down 5% for the year. The S&P is down 5.5% for the year. The Nasdaq's down almost 10% for the year. So we're beating all the indexes, all the major indexes, using Yieldmax and margin, and we're living financially free out of our brokerage accounts as a result. If you need help doing the same, email me for my e-guides at akintodd48@gmail.com. I'm not worried about this margin leverage because my dividends of over $600,000 per year will pay this back in less than 1 year. And I'm also not worried about the interest because I've negotiated my rates down twice. Many of my clients who bought my e-guides did the same thing. So again, even with margin, even with 500,000 of margin leverage, which is 50% margin in my account, okay, of this $1 million account, this is about 50% leverage. We're still beating all of the indexes. We're down 5% for the year. How are we doing this, okay? Well, it's because I stick with a combination of the indexes, okay? I use Yieldmax, Cornerstone, Roundhill, Defiance, and now YieldBOOST to get this outperformance. Some move down less on down days. Some, to sell at the highs because certain premium thresholds were triggered, or you get an announcement like we got in our Discord, the N2 filing for Cornerstone, so we sold that at the highs, and we're boxing at the highs there, so that's how we outperformed as well. So when we sold that, we had all this capital to deploy elsewhere, and we've been buying the dips in the market, okay? The market's been down huge recently, as you know. Here's a chart of SPXL right here. It's the triple long of the S&P 500. As you can see here, huge pullback on the chart, and all the other index charts look the same, okay? And so this is the time to be buying the market. My members and I have already been buying these dips, okay, around the 10% threshold for the S&P. Obviously, the Nasdaq went down around 12%, and the Russell went down almost 20%. So we've been buying these various forms of the indexes in our portfolios during the recent dip, and now we're starting to look at GraniteShares YieldBOOST funds because they have index vehicles out now that you can use. YSPY tracks the S&P 500, as you can see here, but the key with GraniteShares is that they use leverage, okay? So they sell put options on triple leveraged S&P 500 index plays. I started out buying UPRO and SPXL when I was trading in the market early on in my career, and they really got me ahead, but they didn't give me qualifying income to the banks for loans, okay? When I was trying to get a house for my son TJ, I always say I couldn't get a loan because I didn't have enough qualifying income. I either needed a pay stub or I needed dividends, okay? And my banker said that margin wouldn't show up on the credit check, so I started using margin to get my dividends, and I couldn't buy UPRO anymore, okay? As a result, I had to buy these other index funds like Cornerstone, Yieldmax, Defiance, but I never wanted to let go of UPRO and SPXL and TQQ and all those other triple leveraged index funds because they work so well, so I sold put options on them, okay? And they lowered my margin and they lowered my risk. But now GraniteShares just does it for you. So again, here's YSPY, it's the S&P 500, and it sells put options on the leveraged ETFs to get more premiums, okay? They also buy put options to help mitigate against extreme down moves in the S&P 500, as you can see here. So you're getting this extra income because it's leveraged. They're selling puts on these indexed ETFs, which aren't risky in my opinion because the indexes always go up over time. That's what I was saying on the podcast recently. I was like, where is the risk in this? I was asking Will. It seems risky because you're selling put options on triple leverage ETFs, but you're lowering your cost basis and your risk by receiving those higher premiums, okay? So where's the risk if the indexes always move up over time, all right? Even if you get assigned, you're just gonna get assigned at the lows, and then you really make a lot of money going higher, okay? Because you make the capital gains on the long side. So you get dividends from these other funds that we always mention, but then you get the capital gains from UPRO and SPXL if you were assigned. That's why I like selling options myself on them. All right, the major factor that you have to watch out for with GraniteShares and YieldBOOST is the maintenance. It's 75% maintenance, but I understand why they have it at 75% maintenance at E-Trade because UPRO and SPXL are 75% maintenance because they're triple leveraged, okay? So these are higher maintenance. If you need help understanding maintenance, that's in my Volume 3 e-guide. Maintenance is the key to everything that I do here, because for every $1 you put in your account, you get $4 of purchasing power. I'm just using a fraction of this around 1 million in purchasing power to get ahead. As I always say, this debt doesn't show up on a credit check to the banks. And then my available withdrawal stays high. It's around 200,000 at the moment, which means that we can withstand over a 10% correction from this point on and still not reach a margin call. But I also have shorts on. I have about 100,000 worth of shorts on, including triple shorts, options, and short income ETFs. And that also would raise my available withdrawal by another 150 grand should the market pull back another 10 to 20%. So we're not going to reach a margin call because we're always protected, okay? We have our put options on and we have all of our other short instruments on. But again, we can withstand a 10% correction at this moment just because we buy a lot of low maintenance names. So why buy GraniteShares if it has 75% maintenance? Well, it's simple. It's a high dividend paying vehicle, okay? I want these dividends. I want essentially the vehicle to go sideways. As you can see by this chart here on YSPY, we don't have a lot of time, okay, yet because the funds just came out. But as you can see by this chart, it moves largely sideways, okay? On an up day, on Friday, the markets were up around 2.5% and YSPY was up 0.86 on Friday. So it doesn't really move up as much as the market because, again, they sell put options. But overall, if you just hold this fund for long enough time, you're going to cash flow the investment, okay? With those high yields, your dividends are going to cash flow your investments once again. And the indexes always move higher, so you're going to win over time, even if this decays on its chart, okay? And then they have the put options just in case we were to have a big crash in the market, okay? That's the same reason why I have my put options on. So obviously I keep funds like Cornerstone, Defiance, and Roundhill up top because they are the total indexes and they're not leveraged, okay? They are single leveraged and they usually fall less in a down market, okay? Cornerstone, Roundhill, and Defiance. Cornerstone fell less in the market during the recent downturn, as you can see by my mouse right here. Of course, we had this big drop here, but that was because of the N2 filing alert, which we got in Discord. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We have almost 2,000 members here in the Discord chat and Pursuing the Fire Lifestyle. We have other channels here for your enjoyment too. We have Roundhill, Yieldmax, Defiance, GraniteShares, and GraniteShares here now. We're all here to help each other get ahead and live the fire lifestyle, which means financially independent, retire early. So we alert you of the Cornerstone rights offering announcement here in Discord. That's why it was originally started. And we get the N2 filing first for Cornerstone, so that tells you before the rights offering. So I was already lightening up on shares up here, as you all know, as my members know, and I was boxing Cornerstone shares, okay, so that I was lowering my maintenance to 5%, and I was protected to the downside with my box shares with Cornerstone. So I was already well positioned for this move down, but when we got the N2 alert, members and I who saw this alert in the Discord chat room sold what we could, okay? So we sold right here at the highs. We lost about 2.5% total during this whole sell-off, but I thought that was okay because we received premiums of around 38% the entire time. We had a huge gain. We're getting the 20% dividend in Cornerstone. We're getting the drip gains at the NAV in Cornerstone, which were 37% of the time. Now they're only 22%, as you can see, but that's still free money every month. You're getting the 20% dividend, 22% gains on top of that dividend every month with the Cornerstone NAV drip, and it's totally indexed, and you get days gains potential, okay? Cornerstone was up 0.5% on Friday. Just make sure you play Cornerstone properly around its premium thresholds. Once again, Cornerstone is a 4-star fund, but you have to play it properly, okay? Just like other closed-end funds. If you need help playing Cornerstone, that's in my Volume 4 e-guide. And again, when you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. We also tell you who has the special NAV drip for Cornerstone, okay? Because not every broker has the special NAV drip for Cornerstone, okay? We also tell you who has the lowest maintenance here at Discord. It's a one-stop shop for all things finance related. So I keep Cornerstone and Defiance and even Roundhill up high, and then I keep YieldMax stocks down low, and then these YieldBOOST funds will stay in the middle because they might not move up as much as the indexes. They can also fall harder than the indexes, but ultimately they will come back, as the indexes always come back. So we're getting index exposure nonetheless with YieldBOOST funds like YSPY and TQQY. So I have to do this, but I keep them at about 5,000 to 10,000 each in my portfolio because of that high maintenance and because they are a little bit more volatile. If you go to other brokers, they may have lower maintenance and you can buy these YieldBOOST funds with more of your margin purchasing power, but beware, these funds are somewhat leveraged once again, so you don't want to use all of your margin leverage on YieldBOOST just because it's lower maintenance somewhere else, and you may not get that special drip for Cornerstone if you're at that other broker. You have to have Cornerstone because it gives you the day's gains, okay? They average 30 to 40% premiums in my lifetime since I've been using Cornerstone since 2020. They give you the day's gains we so desperately desperately need in this market because you get dividends that erode with Yieldmax and Defiance. So Cornerstone is one of the main vehicles I use to get those days gains. Of course, we have many other holdings in the portfolio. If you ever want to follow my portfolio, just head over to the membership section and YouTube. You can keep track of all of my holdings there. So I really like what GraniteShares does with their options approach. Again, I already sold options myself to lower margin. I think that you can do both, okay? You keep GraniteShares in your account because they're still going to give you that index exposure with high amounts of dividends and qualifying income to the banks for loans to live free from a job. So I still believe in having GraniteShares. You know it's going to work over time just because it's tied to the indexes. And then I also sell my put options to lower my risk and lower my margin. I've lowered my margin by about 100,000 this year, a little over 100,000, thanks to selling these put options. And again, they lower your risk because the premiums you receive lowers your cost basis, which gives you the stocks at much cheaper prices than the market. Warren Buffett even sells put options on his Coca-Cola stock, so it's a very conservative strategy. If you need help selling put options like I do, that's in my Volume 6 e-guide. And if you need help buying put options like I do to insure my account against a market crash, that's in my Volume 5 e-guide. All right, so that's how we've been outperforming, okay? It's with Cornerstone and Defiance, okay? Defiance falls less than the market on down days, I've been telling y'all. We've also been buying staples plays, which have been up like crazy. Go see my past videos on all those staples plays that I have in my portfolio. I think a lot of them are still cheap, by the way. And then, of course, we have our short income ETFs, our triple short ETFs, and our put options. So our available withdrawal is high enough, again, to withstand over a 10% correction from here. And then if we had another 10% correction after that, which would be 30%, which is just crazy in the market, okay? Well, then our short income ETFs would bring back all of our available withdrawal as we sell them, and we'll sell them for gains and still outperform the market. And then our put options would be up even more, okay? Because even in that kind of prolonged down move, okay, our put options would still be worth something. But if we have a prolonged down move, then our dividends will just pay back our margin leverage within that time period. So I'll never be close to a margin call anyway. When our debt gets paid down, our account grows. That's how we still grow regardless of market conditions. And again, these are going to move around a bit, as Will said in the podcast recently. So I'm going to keep these in the middle of my portfolio, and I'm going to build them up out of my future dividend cash flows. Our margin's getting paid down so fast after all that we can afford to do this without much risk. The only risk to our strategy is the indexes themselves, which always go back up over time, leveraged or not, like in YieldBOOST's case. This is why my strategy with the indexes on margin is so effective and has beat the market every year since I've done it. Again, just play by the rules and you'll continue to beat the indexes while living financially free out of your brokerage account using margin. All right, email me for my e-guides if you need help doing the same. When you buy my e-guides, you get free access to Discord for life and my phone number for life. So keep that in mind, okay? You can call me anytime you have questions about your portfolio. Just text me first and we'll set up a time after that. All right, and be sure to check out that recent podcast I did with Will and Michael to get more color on these funds. I really appreciate them for having me on their podcast. All right, and if you like this video, please click like or subscribe, and I'll talk to you soon, everyone. Thanks.